Warren Buffett, the legendary investor and CEO of Berkshire Hathaway, is known for his smart and strategic investment decisions. Every move he makes is closely followed by investors from all over the world, and it is logical that this is the case since he is neither more nor less than one of the best investors of the times. His ability to identify opportunities and his disciplined approach have made his investment decisions a benchmark. In this video, we're going to look at the 5 stocks Warren Buffett has bought and sold in 2024. Get ready for an in-depth analysis that will not only reveal Buffett's investment choices, but also provide context and detailed financial analysis for each one of these decisions, helping them better understand the strategies behind their portfolio management. Let's start then by mentioning Warren Buffett's main purchases so far this year. Stock 1. Liberty Media Corporation. In 2024, Buffett decided to increase his stake in Liberty Media Corporation, acquiring more than 34 million shares and marking a significant move in his investment strategy. Liberty Media, a conglomerate with a diversified portfolio in media and entertainment, represents an attractive opportunity in a sector that is constantly transforming and expanding. Warren Buffett has shown renewed interest in this company, underscoring his confidence in Liberty Media's ability to adapt and thrive in today's dynamic media environment. The reason behind this investment lies in Liberty Media's strong financial performance and its strategic focus on growth. Liberty Media has proven to be a robust company, with a portfolio that spans diverse segments such as satellite radio, entertainment, and sports. This diversity in its assets allows the company to meet market challenges with flexibility and take advantage of new revenue opportunities. Its consistent growth in terms of revenue and profits reflects effective management and a strong ability to innovate. The inclusion of Liberty Media in Berkshire Hathaway's portfolio offers Buffett greater exposure to the media and entertainment sector, which further diversifies his investments. We must not forget that the CEO of Berkshire Hathaway is a lover of diversification, a strategy key in your investment approach. Buffett firmly believes in the importance of spreading risk across different assets and sectors to protect his portfolio against market fluctuations. This purchase makes Liberty Media Corporation one of the 15 most important companies in Berkshire Hathaway's portfolio, representing 0.6% of the total. This investment in Liberty Media Corporation not only adds a dynamic component to the portfolio, but also provides significant growth potential given the continued development and expansion of the media sector. Stock 2. Chubb Limited. Buffett has decided to increase his investment in Chubb Limited, acquiring approximately almost 6 million additional shares and increasing his stake in the company by 29%. Chubb Limited, headquartered in Zurich, Switzerland, is one of the largest and most recognized insurance companies in the world. Founded in 1882, it began as a small insurer specializing in boat insurance policies. Over the years, Chubb has grown significantly, expanding its coverage to include property and casualty insurance as well as specialty insurance for individuals and businesses. The turning point occurred in 2016, when the company was acquired by ACE Limited, a global insurance company. This acquisition allowed Chubb to expand its global presence, combining its operations with those of ACE and strengthening its position in the insurance market. Chubb's financial strength and ability to manage complex risks make it an attractive investment in the insurance sector. Buffett's decision to invest in Chubb reflects his confidence in the company's ability to deliver stable, sustained long-term growth. Today, Chubb Limited is a leader in the insurance industry with operations in more than 50 countries. The company offers a wide range of products, including property, casualty, health, life, and specialty insurance. Its focus on innovation and customer service has been key to maintaining its leadership in the sector. This investment has led Chubb to become the 9th largest stock in Berkshire Hathaway's portfolio, with a 2% share of the total. Stock 3. Occidental Petroleum Corporation. It appears that Buffett has shown a growing interest in the energy sector, specifically Occidental Petroleum. He decided to buy more than 4 million shares of this company, making him the largest shareholder. This company, dedicated to the exploration and production of oil and gas, has been in Buffett's sights due to expectations of an increase in global energy demand. Occidental Petroleum Corporation is a major energy company headquartered in Houston, Texas. Over the decades, the company has grown significantly through a series of acquisitions and expansions, becoming one of the leading producers of oil and natural gas in the United States. The company has also invested in international exploration and production activities, establishing a notable presence in South America, the Middle East, and Africa. In 2019, Occidental Petroleum completed the acquisition of Anadarko Petroleum in a transaction valued at approximately $57 billion, which included both cash and stock. This purchase cemented Occidental's position as a global leader in the energy industry by combining its assets with those of Anadarko. Buffett has expressed his belief that oil demand will not decline significantly in the near future. The firm now occupies the sixth largest position in Berkshire's portfolio, with a nearly 5% share, just behind another oil and gas producer, Chevron. If you find this content useful, remember to give it a like and subscribe to the channel so you don't miss the next videos. Let's continue. Stock 4. Sirius XM Holdings. A couple of months ago, Buffett decided to increase his stake in Sirius XM Holdings Incorporated, the main satellite radio company in the United States. Sirius XM's strong subscriber base and ability to generate recurring revenue have likely been key factors in this decision. Sirius XM has maintained consistent growth in its subscriber base and advertising revenue. The company has improved its profitability and expanded its content offering, which has strengthened its position in the media and entertainment market. Sirius' acquisition of other media, such as the purchase of podcast streaming service Stitcher in 2020. Additionally, the company has been focusing on expanding its digital services, offering online streaming options and mobile apps to reach a broader audience. The investment in Sirius XM diversifies Berkshire Hathaway's portfolio into the entertainment sector, complementing Buffett's other bets such as Liberty Media. Stock 5. Atlanta Braves Holdings. Atlanta Braves Holdings Incorporated is a subsidiary of Liberty Media, acquired by the company in 2007. The acquisition included control of the Atlanta Braves baseball team and its related operations. So, these shares were introduced as part of Liberty Media's capital structure to represent a stake in the Atlanta Braves baseball team. The company not only controls the team, but also the Battery Atlanta, a mixed-use development that includes retail, entertainment, and recreational activities. These types of assets can generate additional revenue and attract more fans, which benefits the organization as a whole. In 2024, Atlanta Braves Holdings remained an integral part of Liberty Media's portfolio. The Atlanta Braves baseball team has maintained a competitive position in Major League Baseball with notable performance in recent seasons and has achieved a significant increase in its revenue levels. Surely for Buffett, this purchase represents an investment opportunity in a company that combines professional sports with urban development, and its market performance reflects stability and long-term growth potential. With the success of his investment strategy, Warren Buffett not only focuses on purchases to strengthen his portfolio, but also on adjusting and optimizing his positions based on market conditions and future prospects. Let's see then, the 5 Berkshire Hathaway sales so far in 2024. Stock 1. Chevron Corporation. Buffett has decided to reduce his stake in Chevron in 2024, selling around 3 million titles, which would be almost 3% of the total. Although Chevron has been a major investment in the energy sector, challenges related to volatility in oil prices have influenced this decision. The sale of Chevron shares reflects Buffett's strategy of minimizing risks and adjusting to changing trends in the energy market. Chevron has had to invest significantly in clean energy infrastructure and technologies to stay competitive. Although it has shown progress, the associated costs and competition in the renewable energy sector have affected its profit margins. Therefore, Chevron's need to adapt to new regulations and market trends has increased its operating costs and affected its profitability. Reducing the investment in Chevron allows Berkshire Hathaway to minimize its exposure to a sector with high volatility and redirect those resources towards investments with better prospects for profitability and growth. In any case, Chevron still occupies 6% of the total portfolio. Stock 2. Louisiana Pacific Corporation. Warren Buffett has also decided to reduce the amount of shares he has in Louisiana Pacific Corporation. Louisiana Pacific Corporation is a company that manufactures building materials, such as wood panels and other similar products. However, the company has had some problems recently. The construction market can be quite unstable, meaning that demand for materials can go up and down quite quickly. Additionally, Louisiana Pacific has faced strong competition from other companies that also produce building materials. Therefore, instead of maintaining a large investment in a company that is dealing with these problems, Buffett has decided to sell some of his shares. In this way, the businessman ensures that his money is invested in safer and more promising places. Louisiana Pacific has had inconsistent financial performance. This means that your profits and losses have varied greatly. This is why Buffett chose to get rid of almost 450,000 shares, reducing his participation in this company by 6.34%. Although the company has tried to improve its efficiency and reduce costs, challenges in the market and competition have made it difficult to maintain positive results. Stock 3. Apple. One of the most striking decisions that Warren Buffett has made this year is to sell part of his shares in Apple. More precisely, about 116,000 shares, which would be almost 13% of the total. Although Apple has been one of the most successful investments for Berkshire Hathaway, Buffett has decided to adjust his stake in the company. But why has he made this decision? First, it is important to understand that Apple has done very well during 2024. The company continues to generate enormous revenue thanks to its popular products such as the iPhone, iPad, and MacBooks. In addition, Apple has developed a range of services such as Apple Music and Apple TV, which also bring it a lot of revenue. Overall, Apple is a solid and profitable company. However, despite this success, Buffett has decided to reduce his stake in the company. Apple shares are up a lot so far this year, up over 17%. Although it may be hard to believe, this extraordinary increase may be a key factor why Buffett decided to sell Apple shares and take profits. It is also true that if you invest too much in a single company, you risk losing a lot if that company runs into problems. We must not forget that Apple still represents 40% of Berkshire Hathaway's portfolio. Stock 4. Paramount Global. This year, Warren Buffett has decided to sell 88% of his Paramount Global shares, which is equivalent to more than 55 million shares, a move that might come as a surprise to many. Although Paramount has been a major investment in the world of media and entertainment, there are reasons behind this decision that have to do with the way the market is changing and the challenges the company faces. The company is known for being a large producer of content, from movies to television series. It also operates on cable television and streaming, such as the Paramount service. However, as of late, Paramount has had to face many obstacles. There are many new platforms and services competing for viewers' attention. Services like Netflix, Disney Plus, and HBO Max have been in the game, and this has left Paramount struggling to stay relevant and attractive to its audience. We must keep in mind, the production of movies and series can be very expensive, and with fierce competition, it has also had to adjust its prices and offers, which has put pressure on its profit margins. Buffett, by reducing his stake in Paramount, is trying to manage these risks. He is protecting his investment and avoiding having too many open positions in a company that faces many challenges. Stock 5. HP. Although it has accumulated an increase of almost 22% so far this year, the CEO of Berkshire Hathaway has decided to sell all of its shares in HP, something like 22 million shares. Famous for its printers and computers. For years, HP has been a big name in the technology world, and many people trust its products. However, the technology market is changing rapidly. Competition in technology is fierce. Today, there are many new and existing companies offering products similar to HP. New brands and evolving technology make it harder for HP to stay ahead. Furthermore, technology is advancing by leaps and bounds, and HP needs to invest a lot of money to continue developing new products and improving the ones it already has. To many, Buffett's sale of HP shares appears to be part of a broader strategy to move away from hardware and into sectors such as energy and entertainment, where he sees greater long-term growth potential. Last year, the investor also decided to sell his shares in HP, which at the time represented almost 77% of the total. Therefore, as of now, Buffett no longer has a stake in the company. Warren Buffett's investment decisions in 2024 reflect his ability to adapt to changing market conditions and adjust his approach toward diversification and long-term stability. By analyzing the stocks he has bought and sold this year, we can see a clear strategy of strengthening the portfolio with investments in promising sectors such as entertainment and energy, while reducing exposure to industries that face significant challenges. These decisions not only underscore Buffett's wisdom as an investor, but also provide valuable lessons for all of us. Which sector do you think Warren Buffett should explore more in the future to keep his portfolio balanced? We'll read you in the comments. If you like today's content, remember to give it a like and subscribe to the channel so you don't miss our next videos. I'll see you in the next video.